Hi, thanks for tuning in. This is the US Futures weekly chart analysis for the week ending 26th of April. First chart is the US dollar index futures. It's always an important chart to look at as it plays such a part in many of the other markets we look at. I've marked in the axis line, which sits just a fraction below 104. You can more or less say it's at 104. And 3 weeks ago, price accelerated higher above this level. There's been a number of attempts to challenge this level previously that have failed or not been successful. But you knock enough times on the door and price does eventually push through. And it pushed through 3 weeks ago. And since then, the market's been consolidating sideways. It's consolidating right up high in the range, which is generally quite a positive sign. Now, early in the week, this week, price did attempt to push higher, but there wasn't much demand in the market. Certainly not enough demand to maintain higher prices. And instead, price came back and spent the week absorbing supply, which is exactly what you want to see after prices regained a new level, and it's probably absorbing supply from the left here. And there's also likely to be a little bit of shorting in the market for people who are expecting the market to pull back a little bit after accelerating higher, and also some profit taking from those who bought at a lower level. So the market's been consolidating this week. Price is consolidating right up high within this up bars range, which is a sign of strength. And it does look as though the market is preparing for an attempt to push higher in response. But that's yet to be seen. E-mini S&P. This is S&P 500 index futures. The important level just comes through here. You can see where price gapped up, which is always a little bit of a concern after a big push higher. A gap up to a new level is often a sign that supply is being drawn out. It's a tactic to sell. The gap up encourages people to come in and buy, and that buying is being absorbed by the sellers. And you'll often find a high develops when prices gap up like that. And in response, price here is pushed back lower. And this week, the market's floated higher on a relatively low volume. This is showing you that the selling pressure that came about the breakdown here isn't chasing price lower, and this allowed the market to float back up to the important level here. The real challenge is to regain that and push higher. It is possible. It'll take a bit of an effort to do so. Quite often you'll see price move back up to the important level, the breakdown line here, and then fail and move lower in response. So we'll really have to wait and see what the response is. The market's done the easy part, which is to float higher on reduced volume within what is effectively a supply vacuum. All the supply in that level was absorbed when the market moved lower here. And that left a temporary supply vacuum within that level, which prices floated up within. And it stopped at the logical level at the breakdown line. And we'll see if there's enough strength for it to even make an attempt to recover, or whether price moves lower from here. US Treasury 10-year note futures. And you can clearly see where the breakdown took place here. It wasn't a really convincing breakdown. The mid-bar close shows there was some support in the market. And then since then, the market's ground lower with reducing spreads and almost a reluctance to move lower. The previous week saw high volume and an attempt to hold on to the lows of the previous bar. And this week, spreads narrowed a little more again, but volume is very low. So selling pressure has eased off, at least at this point. There's a reluctance to move lower, and there's no serious demand for the upside. So price is just edging lower without any real intent. Copper price futures continue to accelerate higher. Now, if we draw it a little bit differently than I have been doing more recently, You can see prices really accelerated higher from this point, or even from this point. This bar here was a narrower spread with a mid-bar close, absorbing supply from the left in most part, I expect, and then prices accelerated higher in response. This week saw some testing for supply, which is a necessary thing to do with volumes being as high as they have been more recently. Some testing for supply early in the week, and then a secondary response higher. This market continues to accelerate higher. Thrust was a little bit less this week. You can see that there's the high of the previous bar. So it's really only made that much ground this week on what is quite high volume. So you might find that there is a period of recovery due shortly where the market will test for supply and attempt to absorb any supply that is drawn out. But at this stage, there's a lot of momentum in this market and it's attempting to keep moving higher. Gold price futures. Gold price futures have a nice reversal in the background, which we've mentioned many times. There was a consolidation in response, an attempt to move higher, and here was the real acceleration out. There was a period of consolidation here, and that's what copper may need to do shortly, and then a secondary push higher. Now, there's been some supply drawn out here by the looks. It did appear as though it was all under control in last week's bar. This week's bar suggests that further supply has been drawn out. The mid-bar close suggests there's still an attempt for the market to absorb that supply and recover prior to any attempt to move higher. But at this point, there has been supply drawn out, and the market appears to be making a pretty good attempt at absorbing that supply, which, if successful, will open the path of least resistance towards the upside. You'll probably see a secondary attempt to push higher. So just let this run its course and see if the market is strong enough to move higher in response. It'll really take a push above 2,400 to initiate another move higher. And at this point, it's looking quite possible. Silver price futures are often more volatile than the gold price market. And that was seen this week where gold came back with a mid-bar close on average volume. This market, which is following gold to the most part at the moment, it's not leading, has had supply drawn out in the same fashion, and it's come back with a low close near the week's low on an increase in volume. So this was traders jumping out of the market. I expect that if gold continues to consolidate, this market will do so as well. It'll just be a little more volatile. And this market would need to push above this level, which is just below 29 for price to break out again. Light crude price futures are back in the game again now. We saw a period of consolidation develop through here. Price pushed up, moved into almost a form of bullish absorption through here. The next higher breakdown line goes through there, and you can see the market's attempting to consolidate at this level or slightly above this level, which is positive. The next push higher would take place through here. So you may find there's a period of consolidation between 82 and 85, which is kind of what we've been expecting. And any further push higher or breakout would take place at 86, 87, at 88. 88 is the level to watch. But I expect the market will probably move sideways between 81 and a bit and 85 for a little period of time and possibly just consolidate in there prior to any attempt to accelerate higher. This is the Euro US dollar currency futures. The important level comes through there. You can see price broke down 3 weeks ago and there's been a modest recovery on reducing volumes. So there's no serious attempt to push up to and recover back above the 108. The market's floating higher on reducing volumes and not looking really intent on recovering that level. I won't be surprised to see the market roll over a little here and perhaps trade within the range here for a period. If there's still some weakness in the US dollar, yes, this market will float higher, but the current volumes are suggesting that there's no intent to push higher. So it's going to trade between 106 and a bit and just below 108 by the looks. And it'll just trade the inverse of the US dollar within that range. British pound currency futures, similar to the euro, which is exactly what you would expect. Price has broken down 3 weeks ago. There was a little further downside follow through here, but after this week's trading, which did trade below that bar's low and then recovered, suggests that there is still some buying in the market. The market did reject moving below the 124 level, and it appears that this market, similar to the euro, is probably going to trade between the 124 and 126 levels. There was no downside follow through. The market did push higher with increased volume this week, so there was a little bit of intent behind it. We'll just have to see if there's any further intent to carry it up to the 126. I imagine it will take some weakness in the US dollar to do so. So the most likely outcome is for this market to trade in a range sideways between 124 and 126. Aussie dollar currency futures. This chart is much more condensed or compressed than the previous two currency charts. So that's seen this market recover back above this level at 65 cents and has pushed back in, trading almost in the middle of this sideways range here. The market rejected moving lower. There is some support at this complex low down here around the 64 cents. The market's rejected that with a little bit of weakness that emerged in the US dollar, and that's allowed this market to push back up and back into this sideways range here between 65 and almost up to 67. The highs of the range are here. I expect this market will attempt to trade in here. There is further support down there if required. Bitcoin futures. Bitcoin futures continue to consolidate and absorb supply just below the previous highs. The previous highs are at this level here. This is the highs of that range. This is the secondary breakdown line. And this is where the market initially attempted to consolidate. And there was obviously going to be supply from the left there. And that's what all this market had to do to work its way through this level prior to accelerating higher. Now this week, earlier in the week, the market did attempt to move higher from the previous bar's close, but there was very little demand in the market. There was some demand. It wasn't sufficient to maintain the higher prices. And in return, price did then drift lower and continue to consolidate. Volumes continue to be high. They've been high for the most part for many weeks now. I think this market would really like to absorb that supply and go back to more normal, more average volumes, and perhaps produce a bar that looked something like this on this sort of volume. That'd be closer to ideal. to show that there's reduced supply in the market, reduced activity, because that will allow the market to push up on more average volumes. These high volumes all the time are detrimental to price moving higher with ease. So just keep your eye on it. It's consolidating sideways. It's not losing much ground, but it's also not in a position to accelerate higher with relative ease while volumes are so high. It can do so, but generally it's not sustainable, and it'll push up and then be sold into and push and pull back again in response. So a sustainable push higher generally sees volumes at average or even just a fraction below average, and that allows the market to move higher with relative ease. So we'll see how it goes. I think you're going to have another week of consolidation, hopefully on lower volumes. Back to the US dollar index futures, and it's pretty easy to see what's happened here. Price has accelerated higher. It's consolidating right up high in the range, which generally is a positive, and volumes are reducing. They're certainly not excessive. So it's making a pretty good fist of it. It's going to take something particular to slow it down now. And even if it did, it's only going to pull back and probably test the 104 level for strength. At the moment, it's not showing that at all. It's looking like it's consolidating up here, preparing for an attempt to move higher. If that's the case, it's going to put many of these other markets under further pressure. So we'll just see. There may be another week of sideways movement. I'm not seeing price wanting to move lower unless something happens to encourage that. I'm seeing an attempt to consolidate right up high in the range, which generally means the market's preparing for an attempt to push higher. And that's likely what's going to happen. And that's going to put all these other markets under some pressure. When that happens, or if it does happen, the markets that are expected to be under pressure, that show an attempt to absorb the weakness that's drawn out due to the strength in the US dollar, are the strong markets. And keep your eye out for them. There'll be some for sure. Gold's been showing some of that, and so has crude. They've both been absorbing the weakness that emerges when the US dollar is strong. They're not going down very much. And then when the US dollar moves sideways, they push higher with relative ease. Silver's dragged along with gold when it shows strength, but silver's not leading at the moment. So if the US dollar does push higher at some point, next week or the week after, keep your eye out for those markets that are absorbing the strength in the US dollar, because they're the markets that are the strongest and will push higher whenever the US dollar trades sideways. Okay, thanks for your time. See you again next week. Thank you. See ya.